Good day traders, welcome to the RMDTRADER Weekly Market Fix. My name is John Jacobs, here to present you with all the best technical setups for this week. Let's start by having a look at some of the trade setups that we shared with you guys last week. So 3 setups that we sent out was firstly the short setup that we had on GBP/USD, then we had a long setup on EURGBP, and then another short setup on NZD/USD. So just looking at the chart and seeing how those ones are currently playing out, we can see that the EURGBP has briefly moved into profit before finding some resistance from the 21 daily EMA. Currently trading back into that entry zone, probably still consolidating for a while. So as long as we are staying in the zone, there shouldn't be any danger of a price stopping out. But if we start moving below the levels from last week, we have our stopping place at 0.838. Of course, should price then get back above the weekly pivot and above the daily 21 EMA, we have our first target where we have our daily 100 and daily 50 SMAs converging at 0.853, and from there a move higher towards this month's pivot and the daily 200 the daily 200 SMA at 0.858. The other setup that we had, of course, was that short on the GBP/USD. This one is currently playing out quite well. We found some strong overhead resistance from the zone that we've highlighted, and we can see price rejection, currently seeing price trading below the daily 21 EMA and daily 50 SMA, as well as all the other moving averages. So at this stage, the first target sitting at our weekly pivot, our weekly S1 pivot at 1.362, with the full target for this week at 1.346. Overall, I do see the trend as overall bearish, and we'll continue to see how this one plays out. Finally, we had that setup on the NZD/USD, and this one was also a short setup. We had initially what appeared to be a breakout from this triangular or symmetrical triangle consolidation, but price seemed to have stalled currently with price action suggesting a possible move to the downside. And currently we are still trading in that entry zone. So as long as we stay within this zone, it's possible that price can continue upwards with our stop setting at 0.725. We can even be a bit more conservative with that stop, having it somewhere at 0.724. Of course, should price break lower, we could see some tests of these lower levels that we have highlighted. The first one being perhaps this breakout level where we have our daily 200 SMA and daily 21 EMA converging on the monthly R1. That's actually sitting, and we can just move that slightly lower so you can see at 0.709. Then we have a target at 0.703, and finally we have some support in this symmetrical triangle back at 0.691. Having a look now at our other setups for the week, we can see looking at the EURUSD, we are now finally seeing that continuation of this bearish trend. We were waiting for a pullback and then some rejection from this area, but we can see price actually decided it seems to be rejecting rather from the monthly pivot with a very strong bearish candle on Friday. Currently, we are trading below the new weekly pivot, meaning the weekly pivot could be a target for a possible correction at sitting at 1.159. And then we have some targets for the week at 1.150 and also at 1.144. Of course, should price continue to if price continue to move up once testing the weekly pivot, it's possible it could also once again go and test this area of resistance at 1.170. Moving on to the EURGBP, the EURGBP has currently found what we hopefully understand to be a bottom. It could be a double bottom, and you can see that we also have this lower the diagonal trend line as well as a horizontal trend line in place. Currently, price does appear to be rejecting the 21 EMA, meaning it's possible that it could be looking for some more downside, but we are possibly considering a long setup from this area due to a possible risk to reward ratio that would be in your favor should you consider the setup. In terms of targets, we have the first target where we have our daily 100 and a daily 50 SMAs converging at 0.853, with a stretch target at the monthly pivot where that meets up with the daily 200 SMA at 0.858. Looking at the Australian dollar USD, the Australian dollar USD has also seen quite a deep pullback back to that head and shoulders neckline all the way at our daily 200 SMA. So this is also presenting us currently with a nice risk reward setup for a move to the downside. And should that play out, we have our entry level or our entry zone concluding where we have our weekly S1 at 0.46. And should price move below that, we have various targets. First one where we have our daily 100 SMA and the weekly S3 at 0.737. And then perhaps for the next week or the next 2 weeks or so, we have some deeper targets all the way down to 0.722, where we have some diagonal support. Looking at the USDCHF, the USDCHF is also currently presenting us with something that will either turn out to be a breakout from this diagonal to downside. So should that occur, of course, that would mean you would have a stop being triggered at 0.909. However, should this be a reversal and we see price moving back above the daily major MAs, especially that daily 100 MA at 0.919, we could see these targets being realized from the monthly pivot at 0.96 and also the highs from, when was that, the end of September at 0.936. However, should this turn out to be a real breakout, we would probably then see some rejection from that weekly pivot and see price continue lower in this scenario if that should happen. Looking at the USD-JPY, the USD-JPY, we have not yet entered into a setup for this pair, but it does appear to be quite bullish actually. We had a slight correction towards just above our daily 21 EMA, and at this stage just trying to count the impulse waves. We had one impulse wave, one corrective wave, the second impulse wave, and the second corrective wave. So there's a very good chance that we will see a third impulse wave to the upside, and should that happen, we can have a conservative target actually of 115.5, and that is the weekly R3, and as well as some previous horizontal resistance should we go back quite a bit. And you'll see we have to go back all the way to, just allow the chart to load. We have to go back all the way towards the beginning of 2017, when the last time we had price visiting that area. But yeah, let's continue to see how this develops, and I'll keep you guys updated. Also, moving on now to our indices, we had the NASDAQ being very bullish at this stage, taking out the previous all-time highs. Currently trading very bullish with that candle on Friday, suggesting some more upside. We have a resistance from the monthly R2, weekly R1 at 16,060. And then, of course, we also have that diagonal overhead resistance slightly higher up at our weekly R2 at 16,250. So this zone would be an area of resistance. Should price move into this area, I would expect a slight correction, perhaps back to the weekly pivot or even that weekly S1 at 15,480. Of course, should we see price move lower and correct deeper, there is very strong support from our yearly R1 converging with the monthly pivot and the daily 100 SMA, all at 15,000. Moving on to commodities and having a look at gold. Gold has this very small inverted head and shoulders pattern, which it did appear to be breaking out of. Currently, we are seeing a candle that has retested that neckline for that inverted head and shoulders. Also a test of the monthly pivot once again. I'm still bullish on this setup, and as long as price can get back above the weekly pivot at 1,787, there's a good chance that we'll see price moving higher. And the next area of resistance would be that monthly R1 and that diagonal overhead resistance at 1,820. The only time we would really be in danger is if we get below this level of 1,770, as that would most probably see a test of this area of support at the weekly S2 and diagonal support at 1,750. Finally, let's conclude by having a look at our cryptocurrencies. We can see that Bitcoin is still trading in this supply zone. Overall, looking at a higher time frame like the weekly and monthly, we are still very much in a bullish uptrend. There does seem to be something that might resemble a very small head and shoulders pattern, and I'll just draw that out for you to see what could be happening. So if we see it as the left shoulder, we see that top as the head and this area as a right shoulder. It's possible that we could see a very a short to medium term top, and that could see price correct towards this area of support where we have our daily 100 SMA, and this is somewhere somewhere below 50,000, between I'd say 46,000 and 50,000. So, but before that will really start to play out, we would have to see a move below that weekly S1, and which is also the low from last week at 56,800. And in terms of a more bullish move, if we can invalidate this right shoulder, and if we see a move to 64,350, and that would also be above the yearly R3, that would be considered bullish, and we might then see a new all-time high for Bitcoin. Also looking at one of the altcoins, let's have a look at XRP. XRP, one of the very few altcoins, or major altcoins rather, that has not seen new all-time highs recently. We can see it is consolidating above all of these major moving averages. So that means should we see another move to the upside in Bitcoin, there's a very good chance that we'll see XRP following that lead and perhaps even outperforming with a breakout from this larger diagonal resistance, and that could see a move very quickly towards that 1.29 to 1.30 level. From there we can either see a move higher, of course, or we see a retesting of that breakout. So that would conclude our analysis and market fix for this week. We hope you enjoyed this week's video, and remember, if you have any instrument requests, be sure to let us know. That concludes this week's video, and that means it's time for this week's pro trading tip. Be disciplined in your trading approach by always sticking to your trading strategy and your trading plan, and don't ever enter trades casually by looking for a trade out of boredom. In the time of utter chaos and uncertainty where the market has no clear direction, it's always better to sit on the sidelines and protect your capital. And as they say, it's better to stay out of the market wishing you were in than in wishing you were out. So until next time, we wish you all the best of your trading, and remember, trade smart and trade successful.